talk, ladies and gentlemen.
Hello guys, how are you? I know that I said we're going to start at 10 o'clock, but unfortunately something came up, but I'm glad I'm here. It has been a long time. So today we have a lot of assets that we're going to be looking at. I hope you can hear me clearly, nice and clear. I hope you can hear me nice and clearly. Just comment on the chat that you can hear me so that I can start. Make sure you like. If you're new to my channel, please kindly subscribe. So what we're going to be doing in this live is this. We're going to be looking at volatility indices and boom and crash. Mainly that's our focus, boom and crash and volatility indices. So I'm just waiting for more people to join so that we can start. So let me look some of the assets that we're gonna be looking at. So we have crash 300, we have volatility 25. So these are some of the signals that we will look at, and also volatility 10. I think this one is now ready. Volatility 10, and we also have volatility 25. Yeah, basically. And we also look at some of the other assets that we're going to be looking at. So let's quickly go to the charts and see. So I'm going to start with volatility 10. I think this one is ready. It can be a signal that you can make use of. Okay. Man, chat box. Okay, so this is what I have. So what I've noticed is this. So I'll take you from we can see this is a signal. Let me just send it in my VIP group. I'll talk about this one. It's an ICT concept that I'm gonna combine with price action. So basically that's what we're gonna be looking at. We'll be combining price action and ICT concept. So this is now a signal. If this 15-minute candle closes like this, then we're ready to go, because I know that the 30-minute candle will be ready. So let me just wait for the next 2 minutes so that I can send this signal. But with me, with all that is happening, what I see is this. Price is respected this fair value gap. So this was a balanced price range where we had a fair value gap on the left side and a fair value gap on the right side. So this one is a very strong confirmation, and in most cases you'd see price will tend to reverse once this happens. But there was more confluence to this. It was only not this. I will give you the whole picture of what is taking place. So let me quickly give this signal so that my VIP members can also benefit from this. So we have a VIP channel where I send signals. I send signals in our VIP group. So this is the signal. So that's what I normally do. I give signals on derivative synthetic indices. So let me just quickly give this signal in my VIP group. But we already had the analysis. I think an hour ago, we want to buy So this is volatility 10. Volatility 10. Does it have an S? It's only volatility 10 index. And so we'll be giving signals as we'll be analyzing some of the assets. So our SL, this is our SL, and our TP is this one. So we have a TP, our TP, and our TP. Where is our TP? This is our take profit. So let me just copy it and paste it there. So this is the signal. So I'm gonna share with you more details because I know this one is gonna be a winning signal. I want to show you where I got this. All right, so this was my analysis, and price is now respecting this balanced price range. So we are about to go up, and we'll go up for a very, very long time. So price is closed. So if you are watching us, you can now take this buy signal for volatility 10 indices. So the candle is closed, and let's see what is happening on the 30-minute time frame. I think we must be having, okay, yeah, it's showing that price has been rejected to move downwards. So on the 50-minute time frame, that's where we have a clear picture. So this is what is taking place. Okay, so the bigger picture is this. We have a bigger picture. Let's go to the H4 and daily, the H4 and the hourly time frame. So what we see is this. This is the bigger picture. So I gave a signal, I think some time back, where I saw this rejection and it dropped down when price reached here. I think we gave a signal around this area where price, when it reached this trend line, there was a rejection block here, and price sold. You can see it came back to make a retest on this rejection block, and then it dropped. So why am I giving this signal now? We can see that we have this trend line. We have this trend line, and price has been respecting this trend line, I think twice. This was the first touch, this was the second touch. So there is now a likelihood that price is about to move up and reach for this upper trend line. So that's what I'm thinking. And we have this again, an order block here around this area. So price currently, apart from this first take profit, this can be our first take profit. 62.60 is our first take profit, and price is likely going to push up and reach this particular area. So this is the bigger picture. So price came. So why did I give this signal? Apart from the fact that there was a trend line here, if you go back now to a 50-minute time frame, you can see that what price did was this. It took out this old low. Price took out this old low, and what then happened? There was a fair value gap as price was dropping to this particular area, coming to this trend line. So when you have that, you have price taking out an old low like this, and price created a fair value gap on this side, and then when price was moving upwards, it also created a fair value gap. Apart from that, we can see here we had on the 50-minute time frame, we had here a break of structure as price was coming down, and this level, which was our lower high, was taken out when price closed above here. So here we already have a change of character. What is it signifying? Signifying that price is about to move up. So we have price changing the direction at this particular level. Price is changing direction, moving from a downtrend to a what? To an uptrend. So when this happens, you would want to use this balanced price range, or maybe you can talk about the. Although some might argue that this is not the right way to trade it, but when it comes to volatility indices, they don't, ICT doesn't work exactly like how it would work in forex pairs. It doesn't work exactly like that. You can see it was completely filled and price closed above this fair value gap. Price closed above this fair value gap. And we also had the fair value gap on the right hand side here. The fair value gap on the left hand side is represented by these purple lines, horizontal lines, these ones. And on the right, I've used this colored blue line. This is a fair value gap. So in a 3 candlestick pattern, we have 1, 2, 3 candles. The low of this first candle is not connected to the high of this particular candle. That's a fair value gap. Then we also count 1, 2, 3. On the right hand side, we also have a fair value gap. You see, price is moving up. I think you are all enjoying profits now. Then on the right hand side, we also have a fair value gap. So once price took out this old low and then it moved up, gave us a change of character, then came back. This was our area where we're going to be entering this trade. And I tell you, this price is going to move for a very long time until it reaches this order block. So we also have an order block, even on the 50-minute time frame, it's an order block that we have. So this is where price is heading. So this can be our first take profit, and that can be our second take profit. So this is what is taking place in volatility 10. So this is what is taking place in volatility 10. And you see price is moving up. So that's how easy. So you can combine ICT concept and price action. Price action, and you see this was a trend line. Price is moving in a bearish channel, and price is about to take off. So basically this is what is taking place here. That's how I was able to get this good entry. So if you are also interested in learning how I analyze the market, you are also free to join our mentorship program, where I'll be teaching you on price action, ICT concept, trading psychology, risk management, and also indicator-based strategy. So basically those are the 5 pillars of our mentorship program. So basically those are the things that we'll be teaching and looking at. So this is the signal, and you guys are in profit. You're in profit. So I'm actually considering doing this on a daily basis, where I analyze the market and we trade together. And we also have our copy trading services. We also have our copy trading services. So this is the first TP, this is our second TP. So basically that's the big picture. So what I've noticed that in trading, what really works is patience. Is patience. I gave this signal some time back, and now it's now paying up. So we have our VIP group. You see price is now moving up, and I'm telling you it's gonna reach this part, because here we have an imbalance and inefficiency. There's an inefficiency here, a liquidity void. We can see all red candles here around this area. They are supposed to be filled up with these green candles. So the green candles are now moving up. The buyers are now moving up. Okay, so that's the first asset that we're going to be looking at. Let's look at the next asset. Which asset are we going to be looking at? We have this volatility 25. Volatility 25. Is there anything that is closer? Okay, we also have volatility 25 1S. So those are the assets that I'm going to look at. And this one is in profit. Volatility 1S. Let's go. Analysis was on 30-minute time frame. The analysis was on a 30-minute time frame. So this is what I'm thinking in volatility. Okay, let's look at the big picture. Let's go to the hourly and check what's happening. So what I've seen that really works for me is a combination of ICT in price action. A combination of that gives you the right, there's more confluence. So some people will be saying, should I go with price action? Should I go with ICT concept? And as with me, I want the confluence. I want with as with me as with me. Okay, I want the confluence of price action where they agree, when they are all telling me the same thing. That's when I can tell. So here we can see price has changed direction. This is on the 4 hour. We had price here in this particular area breaking the structure as it was moving up. Then we had price closing below this high low, which was signifying that price was now, so we wanted a candle to close below this level, which took place at this particular level. So here we have a break of structure. So we have a break of structure here, BOS, as price was, there was continuation of the uptrend then at this particular level. So this, I'm marking this one. So some might say, what about this one? We need at least 3 candles, 3 consecutive bearish candles. So here those conditions were met. So we can also consider this as a break of structure. Let's clone here. We had a break of structure here. We had 1, 2, 3, 4 candles. So this level was our high, and then price moved up. We had only 2 candles. So this level, this one that we have in this particular, not this one. Here at this level, we had our change of character, indicating that price is now changing direction, moving from an uptrend to a downtrend. So at this particular level, we had price coming back at this level where we had a lower low, then price moved up, created a lower high, and then price then dropped, took out this lower low and created a new lower low. So what is this telling us? This is telling us that price is in a downtrend. So BOS again, as price was dropping, coming downwards, and here price moved up, created a lower high, and then dropped, created a lower low. So here with the lower low, and then price pushed up, created another again. So we have 3 candles. We had here a lower high, and then price dropped. So basically we are in a downtrend. So why am I doing this? I'm trying to identify the direction of the trend, or this is my trend analysis. I'm trying to identify on the H4 what is actually taking place. So basically we can say volatility 25-1S is in a downtrend. So that's the first thing. So where am I going to get an entry? We can see when price came down at this particular level, when price came down here, price came for the first time, pushed up, went up, came here, and was able to break, and then used this as a this was a support, and then it was used as a resistance, and then price dropped like this. So we can say in ICT terms that this was a mitigation block. This last bearish candle, if I mark this candle, this will be my bearish mitigation block, and then price came back, used that one to what? To drop, and came down. And then if I'm going to use price action, I'll just mark this as a support, this level. It will be my support level. And then when a support is broken, when we have a swing low and a swing high in price action that breaks a previous support level, this level will then be turned into a support. Sissy, I'm busy. Can we talk later? I'm busy. Thank you. Eat your chappies and play. Huh? I love you. Kiss daddy. Mwah. Go and play. So this support was then turned into a what? Into a resistance. Okay, so that's what happened here, and then price dropped. So this is a flip zone according to if you're using price action terms. This is a flip zone, an area that was used as a support, and it's going to be used as a resistance. And if I'm going to draw my trend line, I have these 1, 2 touch points, and I'm anticipating that price will push up and come again to this trend line, and this trend line is aligning with the flip zone. So at this point where this price is going to interact, where this price is likely going to push and reach, this is where I'm going to take my sell trade. So if I'm gonna drop again, I'm going to look now for an area on my left hand side. I'm looking for an area that I can use for my entry. We can see this is the area where there's a lot of rejection candles. So if price is likely going to push and reach this level, I'm going to take my sell trade around this area, and my stop loss is just going to be above. So what I'm thinking is this, because of the all these factors. One, the rejection area, we can see a lot of wicks that are here. So around this area, I'm going to take my sell, and my stop loss is just going to be above. So if we have a candle that closes above, especially the hourly candle that closes above this trend line, I'm going to exit my position because it might signify that price is about to move up. So this is what I'm thinking around this area. So price is likely going to reach this level. So on the 50% of the order block, should we say an order block? Do we have an order block here? I don't see an order block, but I see a rejection block. We can see this one. This will be our rejection block. You see this last candle with the big wick can be our rejection block. So we can say on the 50% of this rejection block, I'm going to enter a position. Why the 50%? Because it reduces my stop loss 50%. In most cases, according to ICT, the price, if it's going to reverse, it has to respect the 50% of the 50% of the what? Of the rejection block. So at the 50%, half of this, that's why I put my entry around that area. That's where I'm going to take a position, and my stop loss, if we have a candle that closes above this area, I'm going to close. So I have a trading plan, and my target is going to be this previous low. So what I've noticed is this. When price takes out, in most cases, you'd see that price would take out, okay, it was some time back. I noticed that there was a high and in this low. Sometime, I think it was on the 21st. So price moved up, then came down. So this was the 24th. It took out this old low. And then what happened? Price pushed up. When it pushed up, it took out this old high. So this is always taking place, and then it dropped. So why is it price taking out this old low and old high? On top of this, when price was selling, there was what? Buy side liquidity that was residing upon on top of this area when people were what? Selling, and then price moved up, took out the liquidity that was above here, and then it came down. Then there was also liquidity up around above this area when price, it also took out this liquidity and then dropped, taking out what? Taking out liquidity that was on this old low here. So there was also sell side liquidity, and then it moved up. So there is a possibility that when price pushes up, it wants to take liquidity that is above here. So here it can be a little bit funny because price would want to reach out for liquidity above this area. So here you need more confluence. The best approach is to wait and see, is there going to be a liquidity sweep around this area? If that happens, then you know immediately if there is a candle that goes above, grab liquidity upon here, then it closes immediately within this this trend line or within this region, and then price will start to drop. Then you can look for entries using that. So there are two ways, and the last one is the one that is more safe. Wait for price to reach this area. When it reaches, this is one of the mistakes that I've seen most people making. You see immediately when price reaches here, you sell, but sometimes price would want to push and grab liquidity above this area, and then immediately it drops. So you'd want to wait and see how price is going to react with this zone, and then if it closes below this zone, then you know price, this was just a, maybe you can call it a manipulation or a stop loss hand, because there will be stop loss residing above this. So basically that's the buy side liquidity. It is above this area, and then price will then start to drop and move downward. So we will need to wait for price, how price is going to react upon the, but I know here we can see a series of higher highs, higher low. Price is bullish for now. We need to wait for a sign that tells us price is about to drop. So that's what I'm thinking in volatility 25. So yeah, it's just a waiting game. It's just a waiting game. We need to wait and see how price is going to reverse. But around this area, we are supposed to see price dropping and moving downwards. So basically, this is my take. I want to see price reaching here, and then price will push, reach here, and then it drops and come here. So basically, this is what is taking place. Okay, same Yangs. Good morning, say. Good to be here on your live today. Samuel from Nigeria. Yeah, Samuel, I know Samuel is one of my clients. He's always supportive. Then we also have Mr. Lloyd saying, Shalom, Mr. Lloyd. Good morning to you all. Chekube, host team. Good morning. How are you, Emmanuel? Glad to be here. Shana FX, good one, boss. Gills, good morning. Good morning, guys. How are you? Good morning. Good morning. How are you? Okay. So this was our second analysis. So before we go further, let me just introduce some of the things that we have here. Let's come to this part. Okay. We have our new spike detector for 2024, and it is an accuracy rate of 95%. Then it gives audible alerts, push notification, works on a mobile phone when you have VPS, and it's non-repainting. This spike detector is going for $100 US, but now we are having a 50% discount. So today and tomorrow, only today and tomorrow, this spike detector will be going for $50 US. This is only valid until the 26th. Is it the 26th? Today and tomorrow. Yeah, tomorrow. So we have a promotion on our spike detector for 2024. So what we did is this: for all those who have bought our spike detector, we've created a group, a WhatsApp group, where these people will be sharing experiences. So let me show you some of the charts that these guys have been. So this is done to oh, is it the correct one? Man, yo, I don't know where this group is on another number, not this one. This is, man, can you add my number, this number, the other number on the Booming Crash Spike Detector group? So people will be sharing experiences, how best they can improve the accuracy, and how the spike detector has been working for them. Let me just wait for my wife to add my other number on that group. So people have been sharing testimonies using these spike detectors, and they also give me suggestions that we think if you do this would actually help. And this is how I'm constantly updating. I think this is now my third year creating spike detectors. So this is how I've been improving and mastering these spike detectors. People will tell you, okay, the feedback. Basically, that group is there for the feedback, which is very important for you guys to know how this works. Basically, that's why this group is there. So basically, that's all that is there on the Boom and Crash. It's valid until tomorrow. Then we are done. So the DC Boom and Crash spike detector you can rent it for $25 per month. Maybe you don't have money, you get all 6 spike detectors for $25, but you can only use it for a month. After the month elapses, the license will be terminated, so it will stop working after the 30 days. So you can rent it for what? For $25 or the Boom and Crash spike detector. So this is something that we have on our channel. Okay. Then we also have our copy trading services, where you can join for 2 weeks. Let me clarify this. We are saying 2 weeks, and you need a minimum equity of 150. And this works best when you have VPS, and it works. Our profit target for 2 weeks is $300. But once we get this profit target 300, your $50 subscription will elapse. That means you need to rejoin once we get reach our target of $300. Let me just repeat this. We are saying we will pay a fee or subscription fee for 2 weeks, and you need a minimum equity of 150, but we will be targeting a profit target of a profit of 300 US dollars. But if you can get this maybe within 3 days, you need to subscribe again. Then we are currently working on how best, I need suggestions. We're currently working on how best we can do profit sharing account management. How best, because I wouldn't want to trade your account, then after that some time, then you just take your money and you go. I'm still struggling on how best I can do that. You want to introduce the profit sharing. You don't pay a monthly subscription. You only pay, we only share 50% of the profit once we have made profit. So I'm looking at how best I can protect myself, basically. How best do I do that? I need suggestions. Maybe you can type in on the comment section what you think should be the best approach. So we are done with volatility 25. So let's carry on. Where? My WhatsApp. This number will not join. Oh, it joined. I can't see the old charts. That's where the problem is now. Okay, so basically this is the group. People will be sending suggestions. It's just that I've linked my WhatsApp with the other number, and this WhatsApp was not added in this group. So this is the booming crash spike detector group. People will share testimonies how best the spike detector can be improved and how the spike detector is working for them. So if you purchase our spike detector, I'm gonna share a link so that you can join this group. Let me just share a link so that you can also join this group if you purchased, or maybe if you just want to hear the testimonies about our spike detector. Yeah, let me just do that. Come on. Okay, so you're also free to join this. Okay, let's quickly go to the business of the day. Let me continue with the analysis. We have so many assets that we need to cover, and hope I'll cover. So I'm considering doing this on a daily basis. I will see how best I can do this. Maybe every day at 10 o'clock we'll be doing this, but tomorrow is a Sunday. It will be difficult to do this. So maybe from Monday to Saturday we'll be doing this every day. We analyze and take trades together. So let's just check how our trade on volatility 10 is moving. Okay, I think it's moving well. There was a little bit of it's consolidating, which is very normal. It's consolidating around this area. So let's see how this will go, but I'm thinking that price will start to move up very soon. Okay, we're now looking at volatility 25 1s, volatility 25 1s. Is it the one or it's only 25? Okay, this is the one that we were looking at. Then we also need to look at 25, volatility 25. Then I'll show you a signal that I gave on volatility 25. Okay. We are also anticipating that. So we have a channel here. We have a channel that I see that is forming. So for you to get this buy, although buying in these circumstances is not advised, we have it's like a wedge. We have that low and this one. Let me connect this and see how this will go. We have this one. It's like a falling wedge. Okay. Don't worry about the names. The most important thing is how you trade this. So I'm anticipate, I'm thinking that, okay, the same thing, the same concept. Price took out this old low, and then when price came to this region, this fair value gap, is there a fair value gap? It's very small, but we can see on the right we have a fair value gap. Let me go on the 30-minute time frame and see if we have a fair value gap on the left hand side. Okay, we don't have a fair, we have it. Yes, we can see there's a fair value gap here, and there's another fair value gap. So it's called balanced price range. Guys, if you can master this. So on the left hand side we have an inversion. This fair value gap here, when price was dropping, price was supposed to come here, respect this fair value gap. Oh, that's amazing. This is amazing, because I'm identifying something right now. Price took out the liquidity that was residing below this old low, and then when that happened on the left hand side, first of all, on the left hand side we have an inversion or an inverted fair value gap, this one. But inside this fair value gap, we also have a fair value gap on the right hand side where we have these green candles. So we start with this doji candle and these two big candles here. We see, so we have a signal here. We can see we have a fair value gap and a fair value gap here. So price respected this fair value gap, the inversion fair value gap. So price is now about to take off. Price is about to take off. Okay, we see this is the fair value gap, and price is, this is a good sign that price is respecting this fair value gap. So we're about to go up, and our target is going to be reaching, we're going to be reaching this level here. So the second signal is this one. So our stop loss is just so this is the first. So this is the same thing, balanced price range. Again, we have a balanced price range. Fair value gaps that are on the left and the right hand side, it's called a balanced price range. So this is what we have here, and you can see price respected this, it's about to move up. Balanced price range. Okay, sharp. So we can buy, and our target is gonna be here. This, we have a rejection block, this rejection block, or you can target fair value gaps. For you to be safe, you can just target this fair value gap, or maybe you can target what? You can also target the recent swing low. So our recent swing low was this one. You can target that one. You'll be safe because it's still within this fair value gap. We also have a fair value gap here. So price is supposed to cover that fair value gap. Okay. But in these circumstances, I know price is supposed to reach the top part. So for us to be safe, let's just target this area. Our profit target will be here, this recent swing low. Our stop loss just below the previous low here. We need a good risk to reward ratio. Okay, if price closes below, what will then happen? Let me see on a 1 hour chart so that I can check my entries if they are good. Yes, they are good. Let me just put it below this order block of the 1 hour order block here. That's where my stop loss is gonna be, and my target is here. So we have a risk to reward ratio of 1:1.93, which is roughly almost to 2. We can see this big rejection, and price is about to move up. So we can get an entry here. We can take a trade around this area. So my stop loss is just below here, around this area. But ideally, the best approach would be to put your stop loss just below this level here, and then you take. But we know we can increase our reward because price is supposed to reach that rejection block. So we can have 2 take profits. The first one, let's see. Our stop loss is here. Okay, it's fine. Oh, okay, the stop loss is fine. Everything is okay. Then the target This is our target. So this can be our first take profit. Let me send this signal. So this is now volatility 25. Okay, volatility 25. Let me take a picture. Volatility 25. So volatility 25, we want to buy again. Buy volatility 25 now, and our SL is gonna be this value, and the TP is gonna be this value. Hey, I'm too slow. Price is already moving. So this is our TP. So this is the second signal for the day. We're anticipating price to push up. Okay, but we know price can also reach this part, which can increase our risk to reward ratio. But let's just leave it like that. So this is our second analysis. So we go to 10, we looked at 10, volatility 10, 1S. Is there anything? Yes, the invite, you can't see the invite link. So what's happening here in volatility 10? Invite link, I didn't paste it. I was thinking about pasting it and I forgot. Where's the invite link? Let me send it with my phone. Invite link. Okay, basically that group is meant for testimonies, sharing experiences. If you want to hear how this spike detector is working, join that group. There are people who are there who have purchased the spike detector. Basically, I wanted it to be for people who purchase the spike detector so they can give me a feedback. Basically, that's the main objective. So I've shared with you the link for the WhatsApp group. It's for the feedback. So guys, grab this opportunity to get this spike detector. We are running a promotion, 50% discount. It's today and tomorrow. You can only purchase it for $50. After that, it goes back to the original price of $100. Okay, so let's go to the next part. I wanted to look at volatility 10. The big picture. Let's go to the H4. What is taking place? Okay. So what I see is this. Price is moving within this channel. There is a channel here. And here I don't see anything. I don't see anything. But what am I just thinking right now? I don't see a very good trading setup. Price will just read this top and drop. Yeah, because price is supposed to reach for this fair value gap, and there's also an order block around this area. The setup is not that perfect. We don't have a good setup. Okay. This is what I'm thinking. Price will reach the upper trend line because we are still bearish. This is the H4. We can see price is making lower lows, lower highs, lower lows, lower highs, lower low, lower high, and here price made a lower low. So once this happens, price should move a little bit up to create a lower high, and then it drops. So where exactly is price going to reverse? We are looking for a possible selling point of entry. Point of entry. So where exactly can we get this entry? Now I'm just thinking, what do we have here? We have a resistance 1. I can see a resistance around this area, which price is failing to break. If I extend it to my left, is there anything there that I can see? I'm only seeing a resistance here. This is not a very good trading setup. Here we just have to wait. I don't see anything else. I don't see where exactly price is. But price is supposed to push a little bit up and then it drops. But where exactly is price going to drop? I don't see that. Here, if the price action is not clear, if the price action is not clear, you need to wait for good setup. You need to wait for good setup. But what I can see on the 30-minute time frame is that we can buy for now, because we have an order block. No, let me go to the 15-minute time frame. Okay, on the 50-minute time frame, we can see here price respected. It's on the 30-minute time frame. Okay, there was this last bearish candle which was respected when price came to this around this area, and price pushed up. So here price dropped, went up, and then came down. Okay, it's fine. So here around this area, price dropped, okay, here around this area where the change of character as price was moving from a downtrend, and here where the candle, the body of a candle, that's what I'm looking for me to get a change of character. Why did I pick this spot? Because if you look at this area, price pushed up, reached this area, then dropped. Here there was a break of structure. There was a break of structure, and then price pushed up here again, and then it failed. Okay, so it's fine. I now get what is taking place now. If I'm looking, let me make it clear for you guys. So price dropped here, created a lower low. Was this a lower low? And then pushed up, created a lower high, then it created a lower low, then it pushed up, created a lower high, and then here failed to create a lower low. It was supposed to continue breaking this previous low, but that didn't happen. Then price dropped at this particular level here. So that was indicating that price is changing direction here on the 30-minute time frame. Then price pushed up. So this was the previous low that we had, our lower high. So when that lower high was taken out, when this body of this candle closes above this level, we had a change of character. So here we have a change of character here. So that's one, indicating that we're now bullish. And then price dropped, came to this order block, the last bullish candle here, the last bearish candle, this last red candle, and then because of this rapid movement, aggressive price action that took place here, then price dropped like this. So this was a perfect entry here. Then what do we see now? We have a break of structure. We have a break of structure as price is moving upwards, indicating that there's continuation of the uptrend. So price is now dropping. It will come where? When we're going to be looking for an entry now. We're going to be looking, but our target is going to be on this trend line. So we have this last bearish candle, but what I'm struggling to understand is this. We don't have a fair value gap. So an order block will not be an order block if there is no fair value gap. Yes, we have a break of structure, but if I drop down, let me see if I go to the 15-minute time frame, if I can get an entry, because now I can't use this 30-minute order block because there's no fair value gap. And even now, even here, I can't use it again because there's no fair value gap. Let me drop to the 5-minute time frame. I can't call it an order block because there is a criteria that qualifies or validates a correct order block. Yes, we have a break of structure, which is fine, but if I look here now, I have an entry now. I have an entry on the 5-minute time frame. We see price this last bearish candle here, and then price moved up. So we're gonna focus on this order block. Why? Because there is a what? There is a fair value gap. You see this last bearish candle? That's the one that we want. And then if you look closely, there is a fair value gap. The high of this last candle is not connected on the third candle's low. The third candle low is not connected. There's a gap here. Those gaps have to be, that small gap has to be filled up. And we can take an entry once price respects this. So sometimes price according to smart money concept, we are now in the discount. When we are in a discount, we give priority to a fair value gap before we give priority to a what? Okay, before we give priority to an order block. Okay, but we need to check if we didn't get a mitigation block, because the first thing that we have to respect is a mitigation block. Here we had the mitigation block. We're now talking about PDRA, and you can see because of this price moved up. Then that's the reason why price didn't come to this order block, even fair value gap. Why? You're busy waiting for an entry on the fair value gap or the order block, but there was an entry here, price pushed up, and then because of this last bullish candle, price respected it and it moved, it pushed up. Why? Because we're in a discount. Were we in a discount? That's the question. So you will never get, yes, we're in a discount, 50%, 50%. Yes, around the 50% of the fair value gap, which is around this area. Then price then respected the 50% here, and then it pushed up. So the mitigation block. Okay, basically when we talk about flip zone, price pushed up, use this as a what? As a support, and then according to price action, this was then turned into a support. A resistance turned into a support. So let's see how price will respect this. If price drops, probably it will come to this fair value gap and then it pushes up. But there's a likelihood that price can actually respect this area. It can respect this area. The question is why? Why would price respect that area? Because we have a rejection block. So here we can get an entry here, because here if you look closely, there was a break of structure as price was moving upwards. So here we have a rejection block. So let's see if the price is going to respect this. If that doesn't happen, you know price is now going to the next level, which can be this fair value gap or this order block. So there is a debate. It's not a debate, it's how I think. When you're marking your order blocks, do you have to mark the whole candle from the high and the low? And which one do you choose? The one that took the liquidity or this one, the green one? Which one do you choose? Or you only mark the body, you ignore the wicks? But here the wick is very big. Maybe we can talk about this rejection block. I don't know, but I'm just waiting for how price is going to react, and then I'll see it from there. Why did I take off this? Okay, so that's what I'm thinking currently, but I don't advise to take any action here. Just a matter of waiting for the right setup, and then we can buy. Let's just quickly check on volatility 10 and see how price is moving. Yes, we are still fine. There was a big push upwards on the 15. I think that's where we are. Yes, a very big push. You see this big candle. Price will likely going to move upwards. We can talk about we don't have a trend line there. Okay, price is okay. We gave a signal on volatility 25. I think it's 1S. Let's just check what is taking place. No, 25 only, not 1S. I don't want to make this very long, but I'm making it very long. I explain our entry was on the 30-minute. Okay. Apart from that, we can draw a trend line with these two positions, and you can see the trend line is being respected. Price is likely going to move upwards. Okay, but if price now drops, breaks this trend line, because we have two touches, we have one. Do we have anything here on the left side? Okay, we have 1, 2 touches. On the third touch, we have this bullish pin bar, a hammer candle, indicating that price has been rejected to move up. We also have this balanced price range. So we have a lot of confluence. Price is likely going to push upwards. Okay, let's go to the 75, volatility 75. Shh, honey. So here, I just want you to learn from the mistakes that I made yesterday. There was a mistake, not a mistake. Although we were able to get this entry, I shared with my VIP group. This was the signal, but I had made a mistake. Okay, this was the signal. Okay, so we had a flag pattern, a bullish flag pattern, then it pushed upwards. But I want you to show, I want you guys to see a common mistake that I made. It's a common mistake that I made that you guys can also make, and how best you can try to avoid it. So this was the solution, and it paid off. So there are, in most cases, when you're done, there's this guy, Sagex. That guy is a genius when it comes to these chart patterns. He only trades chart patterns. They are very powerful. He trades anything, forex, volatility indices. Is very good. So if you look at most of the videos that he focuses on, he only talks about chart patterns. And when price reaches a trend line, it draws trend lines. Price reaches a trend line, it sells. But there's a mistake that there are two things that can happen when price reaches a trend line. Price can break the trend line, like what happened here. I was anticipating that price was going to respect. I even drew a what? I used this fair value gap and that trend line, and I said price was going to respect this, but you see price then closed above this. So we ended up, our first signal was in a loss because we thought price was going to respect this. But when price closed this fair value gap, that's when I knew that price was never going to retain. And it also closed above this trend line, indicating that there was a break of the trend line, and price was now going to move upwards. Then from there, you need to wait. You need to wait. I'm now sharing with you guys what really worked for me, how did we correct that. You need to wait for price to make a pullback. But when price makes a pullback, how exactly are you going to know if price is now ready to move up? You draw again. It created on the 50-minute time frame a bullish flag. This is a bullish flag. This is the flag. So you wait. As price was dropping, it was creating this flag, and I was just waiting. That's how I got this entry. I was just waiting for price to break from the entry. On the breakout here, I then took a buy, and my stop loss was just here, just in case price tries to drop and retest this fair value gap. So my target now, so I've solved the problem of you need to wait. When price reaches a trend line, don't just anticipate that price is going to immediately reverse. Sometimes price can break the trend line and pushes upwards, like what happened here. And we ended up, our stop loss was hit because we just assumed that price was going to reverse because there was confluence of a fair value gap and the upper trend line. But that didn't work out because price closed above. So you need to wait for a breakout and retrace. Once the retrace took place, we then saw price breaking again another chart pattern, which was now this bullish flag that we had at this particular area, and then price from there started to move upwards. So how was I going to get my take profit? I then measured from here, the bottom part, to this top part, to mark out my profit target, and I took it from this level, around this level. There's a break, and you see this is my profit target. If I come to my left here, I can see there's this area. Around this area, that's when I'm going to but if I go on the hourly time frame, okay, Samuel is suggesting this. Okay, let me try to read and understand what he's trying to say. Samuel said, suggesting for copy trading, DC wife, okay, my manager, should help us run an account where 3 people who can send in $30 each, $60 each. So it will be 180. After 3 weeks, the 3-person can have their separate copy trading account from the profit. So 3 people, they put in $60, it will be 180, and then after 3 weeks, they share profit. I don't really get it. They can as well start subscribing themselves after every 2 weeks. I think this can be a way to more people to get in the pool. But how are those people, 3 people, going to combine? That's another question. It becomes difficult to manage this. Okay, I was thinking of a fund. Okay, I need to sit down, guys. Help me on this one. I want to do the profit sharing, profit sharing account management, and how best can, I know people can submit their accounts and do what, but I'm trying to look for an innovative and good way to do it, where there's transparency on both sides. I don't run away with your money. You don't run away with my money. After making profits, I know that there's that possibility. So that's why I'm delaying. I'm trying to think of a best way. If you think there is a way that works best, or maybe you've done this before, how are you doing it? How do you think we should do it? I think Sam gave this suggestion, but I don't understand what he's trying to say. Samuel. Okay, we're done with volatility 75. Let's go to boom and crash. We had good setup. Okay, I wanted to talk about boom 1000. Okay, in boom 1000, there is a big picture. If we go to the 4-hour time frame, something big is about to happen in boom 1000. For a very long time, I think the greater part of this year, we can see boom 1000 was in a strong uptrend. I think it has created its high 2024 December. You see, it created its, you see this big movement. There's a big bullish movement, I think around April, in April, May. For this past 2 months, price has been just moving up. But I saw something interesting that is building up in boom 1000. What I saw is this. There was a trend line. There's this small trend line. This is the trend line, and that's one. Then I also saw that price, was it on a daily? Price dropped and pushed upwards and created a what? Okay, so this is what let me take it through. Sometimes it's very easy to understand what you are thinking, but to put it on paper or to explain it, it can be difficult. Then price pushed upwards and then dropped and then came back to this. So this is what is taking place here. Let's see. Price pushed upwards, break of structure as it broke the previous high and created a new high. So there was a high, then price dropped, created a new high low, respecting the previous high low. Then price pushed upwards and created a new higher high. You see, so there was continuation of the bullish trend, and then price dropping to the point that it closed below the previous high low. Hey, winner, go and play there. Go and play there. And then it created a new lower low. So this is the first thing that took place. So from here, we're supposed to see price pushing upwards and breaking the previous what? The previous high, and create a new high if there was going to be a continuation of the uptrend. But that didn't take place. That didn't take place. Let me cancel everything that is here. I'm seeing a lot of things. So we can see this trend line that was being respected. It was respected here, here, here. So we had many touch points. You see here. We also see it here. The trend line is being respected. And every time when price reaches the trend line, it's moving up. But here it was broken. And then when it was broken, price then came up and made a retest on that trend line. The trend line that was being used as a support was then used as a resistance. So that's one way of seeing this. So what I'm anticipating is that price is now bearish. There's now a downtrend. This uptrend that we've been seeing or witnessing on the H4 is signifying that there is a likelihood that price is going to reverse and start to drop that one. So for those who enjoy selling in Boom, there is going to be a very good selling opportunity in the next months to come. This is massive. This is massive. I will check on the daily if this is true. Okay, so that's one thing that I saw. Okay, there's this Quasimodo pattern. I'm thinking there is a Quasimodo pattern. Yes. It's true. So when I wanted to make a video on Quasimodo. So if you look at this level here, this low, you see price created a lower low, and at this same area, price created a higher high. So if you see this taking place, price creating higher highs at the same time creating a lower low, you need to wait for price to come back to, I'm not teaching you about a Quasimodo, this level. Price came back to that level, and you see, so using Quasimodo chart pattern, this is the Quasimodo level. This is the level, and price returned to that level, you see, and it was also in line with this trend line. In this particular area, we had a very good confluence. This is our key ML level, Quasimodo level, where we're going to sell from, and we had a signal here which was a shooting star. If you look closely, there was a shooting star here on the H4. Okay, you can't see it, but I can see it. Okay, we have 1, 2, 3 candles. The bearish candle should close at least 50% of this bullish candle, and we have this small candle here which is like a doji. So these 3 candlestick patterns, they form what we call a shooting star. So this was going to be our signal. This was going to be our signal. These 3 candles for us to start selling, and our stop loss was going to be placed just above this pattern, or we were going to place it just above this Quasimodo, this high of this particular area, and we're going to sell. So basically, we are now selling. We are officially selling Boom. Boom 1000. That's one important thing that we need to point out. So price is supposed to drop aggressively down and create a new lower low, and there's a likelihood that price will come to this area and then push a little bit up. I'm now going to my imagination, my powerful imaginative world where I see where price is going to turn and what things that are not even there. Okay, I'm anticipating that price should drop and come this area. Why this area? Because it was a support that was turned into a resistance. Price will come to this area, probably grab liquidity, then it will push upwards, probably coming to this area here, and then it drops. This is crazy. Okay, this is nice. If my daughter hears me saying crazy, there's this show, you know, this show, Annie, which show do you like watching? That show that people say the bad words. A kids show. Diana. It's Diana. That's where they say crazy, crazy. And now she was now, because of this, that cartoon, you know, she's now saying crazy, crazy, crazy. And the other day she ended up saying crazy to me. She doesn't know the meaning of crazy because she's constantly watching these things. So I'm now going to my crazy world. It's a very good kids show, but some of the things that they say is not that nice. Like crazy. It's not good. It's not a good word. So you see, price should drop, grab liquidity below here. It should react to this level, and then this support should be turned into a what? A resistance when price. This is what I'm thinking. This is my crazy world. My crazy, crazy world. So we have a KML here. Quasimodo pattern. So we're anticipating that price should reach this level. Sorry guys. Okay, let me just open the gate. Hello, boy. Come here. Okay, let's just finish this. I'm now getting tired. So that's what I'm thinking. Price should drop. We're now making noise. I think I've. So that's one thing that I want to share with you. Shh. The other one is on. Anish. Hey. Okay, if we go on the H4, we also have something similar. We have a flip zone, a resistance that was turned into a what? A support, and price in boom 300 should push upwards. Then let's quickly go to 300. Price should also drop because of the order block that is around this area. Where is this? Is it on a daily? Cool. So price has reached this order block because the overall bias in this market is bearish. Price should drop and reach here. So maybe this can be a weekly signal. Price should drop here and reach this particular area. Let's quickly go back and check the signals that we gave. It's 25. Hello, boy. Oh boy. Yo, something happened here. Okay, our SA was hit in volatility 10. Price closed below here. Let's wait and see. This didn't work out. Yo, that drop was massive. Okay, let's just wait and see what will take place here. Maybe this was just a liquidity sweep because there was liquidity residing below here. Maybe price wanted to hit the stop loss of the buyers that went up here. We'll see if price is going to respect or close above this level here. Then we'll see how this goes. Okay guys, I think I've talked too much. I need now to, it's now family time. Thank you guys for your time. It's bye bye for now. I think we'll be doing this on a daily basis. I think from Monday 10 o'clock Monday to Saturday I'll be doing this. Every time when I get the opportunity, if something doesn't come up, I'll be here and we'll trade together guys. Thank you so much guys for your time. It's bye bye for now. Who is not in the VIP? Can someone who's not in the VIP pay for copy trading? Someone who's not in the VIP. Yes, you can do that. Copy trading is not for VIP. These are two different things. Copy trading is on its own. Signals, they are on their own. Good morning to you all. Say we want to see the copy trading results. Yes, I'll also send you the copy trading results so that you guys can see what is taking place. Bye guys, thank you so much for your time. The 1 hour was fruitful. Very fruitful. Thank you so much. Bye bye for now. I'm done, but you're making